It's decision time for Bitcoin. Right now, Bitcoin is sitting at a key level, and the next move from here could very well decide whether we are putting in a local low or a local top going into June. At the time of recording this video, Bitcoin's price is pushing up against the bear market resistance band. Now it is starting to break above a little bit, but we haven't seen a strong follow through. And what's interesting here is that rally wasn't random. It actually lines up pretty close with what we have seen in previous bear markets. So if Bitcoin is following history, the real question becomes, what has it usually done in May? Because this is where things start to get interesting. If we go back to 2022, we saw Bitcoin rally into the same resistance band in early April and then slowly began to lose momentum for the rest of April and May. At first it didn't look like much, just a slight slowdown, but then the weakness started to build. Price rolled over, and by the time we reached mid-June, Bitcoin had found a temporary bottom. Now, if we go back to what is probably the most comparable cycle to what we are seeing today, which is 2018, where we see almost the same structure. Price pushes into resistance, momentum begins to fade, and once again May was a month of downside. The market rolls over, and just like in 2022, we saw a local bottom around mid-June. So based on 2018 and 2022, there is a clear pattern. May tends to bring weakness. June tends to be the turning point, and after that we usually see some kind of relief rally. But here is where things gets more complicated, because those aren't the only bear markets we have seen in Bitcoin's history. There is also 2014, and 2014 tells a completely different story. Instead of rolling over in May, it actually pushed higher. Momentum didn't fade, it accelerated. Price continued climbing, and instead of finding a low in June, it found a local top right in the middle of June, before eventually rolling over and finding a deeper low a few months later. So now you're looking at two completely different outcomes for May. One where May brings weakness, one where May brings strength. And if you're trying to make a decision based on that, things don't become easier. But despite moving in opposite directions, they do share one key similarity. They all point to June, because in every case, either June was a local low or a local top. And that's what makes this moment so important, because no matter what happens next, we are likely gonna see a reversal of that sometime in June. So the big question becomes, what's most likely to happen in May this time? And the truth is, nobody knows for sure. It can always go either way. But if I had to lean in one direction, and like I have talked about in my previous videos, I still think we are more likely to roll over here, roll over through May, and potentially retest that 60k area sometime in the middle of June, before we see a counter trend rally of 60k. And the main reason for that is 2018, because structurally it's just very similar. In 2018 we put in a local low in February at 6,000, and in 2026 we saw the same thing. We had a local low forming in February, but this time at 60,000. We also saw a rally in March, followed by another rally throughout April and early May. Again, very similar to what we are seeing right now. But to stay objective, there is still differences. In 2018, the April rally was a higher low compared to the March rally, whereas right now, that March-April move in 2026 has actually formed a higher high, and that's a more bullish structure. So you could argue that this time is different and we can see a continuation higher from here. And honestly, that's a fair argument. But there is also a counter to that, because at the end of the 2017 bull market, the market topped in extreme euphoria and then dropped over 70% going into 2018. That kind of move resets the markets very aggressively, which is why the rally that followed was so strong. But in this cycle, the 2025 bull market top was nearly as euphoric, and the drop we saw after was closer to 50%. Still significant, but not extreme, which means the rally that we saw this time is naturally gonna be weaker compared to what we saw in 2018. And that's really the reality of this market. You can always build arguments for both sides. You can make a case for a continuation higher, and you can make a case for a rejection going lower, which is exactly why this month is super important, because the market is about to decide. Now, on top of the technicals, we also have macro coming into play. This week that this video is uploaded, the market has labor market data, and depending on how that comes in, it could act as a short-term catalyst for the next move. At the same time, we also have a new Federal Reserve chair stepping in around mid-May. Some people see that as bullish, since the expectations is that the new Fed is gonna be more dovish. But in my opinion, that's probably not what's gonna decide the next move, because the real impact from that shift won't come immediately. It will likely come at the next FOMC meeting in the middle of June, which interestingly lines up almost perfectly with this turning point we have been talking about in the middle of June. So if we roll over through May, that meeting could line up with a potential low in the middle of June and could have a positive reaction going forward. So here's how I'm approaching things. If we see weakness from here and roll over in May and see a low sometime in the middle of June, I'll continue to follow that 2018 outlook. If we see stronger confirmation and a follow through above this bear market resistance band, then I will probably shift. I start looking more towards 2014, which would suggest a local top in June, followed by a potential move lower, potentially around October. And if that plays out, it would actually align with the timing of a typical bear market, because historically the bear markets tend to bottom after a year from the cycle high. So if the top was in October 2025, then a bottom around October 2026 would make sense. But at the end of the day, we are not here to predict, we are here to react. So right now I'm leaning more towards a rollover in May and a local bottom around mid-June. But if the markets prove me wrong, I'll switch. Because in this market, being right isn't what makes you money. Being adaptable is. So if you enjoyed this video, remember to like and subscribe. Comment down below what I can do better. I'd love to hear from you guys, and I'll see you in the next one. Peace.